What is cryptocurrency and why is it becoming so popular? Cryptocurrency is a form of digital currency that is secured by cryptography and exists purely in digital form with no physical coins or notes. The first and most well-known cryptocurrency is Bitcoin, which was created in 2009. Since then, thousands of other cryptocurrencies have been created, with some of the most popular ones being Ethereum, Litecoin, and Ripple. As cryptocurrencies continue to gain mainstream adoption, with countries like El Salvador making Bitcoin legal tender and more businesses accepting it as payment, it's important to understand the potential advantages and disadvantages of using them. In this video, we'll explore both sides in depth. Advantages of cryptocurrency. 1. Decentralization. One of the biggest advantages of cryptocurrencies is that they are decentralized, meaning no government, bank, or third party has control over them. Transactions occur directly between users on a peer-to-peer network with no intermediaries involved. This decentralization makes cryptocurrencies resistant to interference or manipulation by any centralized authority. 2. Pseudonymity. While cryptocurrency transactions are publicly recorded on the blockchain, the identities of the parties involved are encrypted and pseudonymous. This allows for a high degree of privacy and anonymity compared to traditional banking and digital payment methods. 3. Fast and inexpensive transactions. Cryptocurrency transactions can be completed in a matter of minutes and at very low costs compared to traditional wire transfers or cross-border payments. There are also no or minimal processing fees for most cryptocurrency networks. 4. Security and fraud prevention. The blockchain technology behind cryptocurrencies is extremely secure, as it is virtually impossible for any single entity to manipulate or corrupt the decentralized ledger. This makes cryptocurrencies resistant to fraud, counterfeiting, and chargebacks. 5. Accessibility. Since cryptocurrencies do not require a bank account or any other third-party involvement, they provide financial access to millions of unbanked and underbanked individuals around the world. 6. Investment potential. Many investors view cryptocurrencies as having significant growth potential, as their limited supply and increasing adoption have historically driven prices upwards. Some cryptocurrencies have seen astronomical gains in value over the past decade, making them attractive investment opportunities. Disadvantages of cryptocurrency. 1. Volatility. Cryptocurrency markets are extremely volatile, with prices often fluctuating wildly within short periods due to speculation, regulatory changes, and other factors. This high volatility makes cryptocurrencies risky investments and less suitable for day-to-day transactions. 2. Lack of regulation. While the decentralized nature of cryptocurrencies is seen as an advantage by some, the lack of oversight and regulation also means there is little consumer protection or recourse in the event of fraud, theft, or other issues. 3. Scalability issues. Many popular cryptocurrency networks struggle with scalability issues, as their underlying technology is not currently capable of handling the transactional volume required for widespread global adoption. This results in slower transaction times and higher fees during periods of high demand. 4. Potential for illicit use. The anonymity and decentralization of cryptocurrencies have also made them attractive for use in illegal activities such as money laundering, tax evasion, and financing of criminal enterprises. This has raised concerns among regulators and law enforcement agencies. 5. Environmental impact. The mining process required to validate transactions on some cryptocurrency networks, such as Bitcoin, is highly energy intensive and has been criticized for its significant carbon footprint and environmental impact. 6. Risk of loss or theft. Since cryptocurrencies are digital and exist solely online, they are vulnerable to hacking, theft, or loss. If a user's private keys or wallet are compromised or lost, their cryptocurrency holdings could be permanently inaccessible. 7. Technological complexity. Cryptocurrencies and blockchain technology can be quite complex and difficult for non-technical users to understand and navigate. This barrier to entry could potentially limit widespread adoption among the general public. Conclusion. As we've seen, cryptocurrencies offer several potential advantages, including decentralization, pseudonymity, fast and inexpensive transactions, security, and financial accessibility. However, they also come with significant disadvantages, such as volatility, lack of regulation, scalability issues, potential for illicit use, environmental impact, risk of loss or theft, and technological complexity. Ultimately, Whether the advantages of cryptocurrencies outweigh the disadvantages will depend on individual circumstances, risk tolerance, and intended use cases. As with any emerging technology, it's crucial for users to educate themselves and proceed with caution. While cryptocurrencies are not without their flaws, they have already disrupted traditional finance and could play an increasingly significant role in the future of money and global commerce. As the technology and regulatory frameworks around cryptocurrencies continue to evolve, their adoption and real-world applications may become more widespread. Thank you for watching, and be sure to like, share, and subscribe for more informative content on the latest trends and developments in the world of finance and technology.